Jose Rasco, you are staying defensive on stocks heading into the end of the year. What's wrong? What has you unnerved?
Well, not unnerved so much as a little cautious. I mean, we see the political calendar is very busy, not just here in the U.S., but abroad as well. We see a lot of referendums and elections. More importantly, we see growth that has been mixed. And there's concerns in terms of inflation and growth prospects on the corporate side as well, pricing power. So, and last but not least, we're worried about the central banks, the policy divergence between the U.S. central bank and other central banks.
All right, let's talk about the central banks a little bit more. Didn't move in September, not expected to move in November because of the election. People are looking towards December. Are you looking towards December for the rate hike?
No, we've stayed pat at looking at mid next year. So June of next year is when our economist sees them moving. I mean, don't forget, there's a lot more dissension on the board today, granted, but growth remains somewhat tepid at around 2%. Second half of the year will be better than it was in the first half, but there's no inflation problem. So it's really hard for them to justify a move in rates at this point, at least.
All right, so you got to get your yield somewhere. You like income-producing assets. That's how you're going to get your yield. What exactly are income-producing assets? Dividend stocks you're talking about?
Well, on the equity side, yeah, we're looking at dividend stocks, the yield play, basically, looking at the U.S. and Europe in particular. There are great global brand names that are out there, large cap, very safe and secure, and they have a dividend. And then on the income side, on the equity side, that's where we're going. On the fixed income side, we're looking at different parts of the world.
All right, and you also see the dollar slipping, so I guess this should be good for commodities. You like oil here, or energy plays?
We do. Our energy team in London and here in New York feels that oil prices will continue to move upward, grudgingly, slowly, but they will move upward over the next year or so. And more importantly, in the U.S., we feel that the worst of the energy collapse is behind us. We see the drill rig count beginning to head back up. And if there is some sort of agreement or not, we still see oil prices heading upward in the next 12 months.
All right, and since we're talking about drilling things, what about gold? How should gold play in a person's portfolio?
Well, and it's the traditional view, right? It's the insurance policy that everybody should have some small percentage of it in there. Our gold expert, who appropriately named Jim Steele, does not see gold rising dramatically here. It's more in a trading range. Again, there's no fear of inflation. There's no real volatility in the markets, and there's no horrible event out there, and the dollar is weakening, not strengthening. So we see gold in a trading range, but not really appreciating too much.
All right, well, thanks a lot for coming on and talking about it, Jose.
Thank you.
Thank you for watching The Street.